Morning, afternoon, evening, guys. I hope you guys are having a great weekend. So let's do the lesson for the swing pattern. So this lesson refers to both the swing high and swing low. So when you have a swing high like this and also a swing low, what's really happening on the daily is that the first candle, the first day will create a high. They're creating liquidity. Then the second day is going to take out that liquidity, okay, of the first day. And then once they've taken out the buy side liquidity, then now the third day will close below. Now it's a clear swing pattern. That's the sort of like the summary, right? What's happening? Even if it's a swing low, the first candle, the first day will create a low. The second day will take out what the previous day's low. Then now once they're done taking out the sell side liquidity, the third day will now price will go up. And now price is now bullish, and they'll be targeting what the buy side liquidity. Even here, anyone who bought here to take out the buy side here, right, will be taken out by the third candle. Now, when you have this clear swing pattern, for swing patterns, right, for clear swing patterns and key level that you can use to do a swing trade, you are going to be selling on on the fourth or fifth day. On which key levels? On these key levels. So what you're going to do, right, is on that three candle pattern, you're going to mark the open, the close, the low, the high, and also the equilibrium of the order block. So you're marking the open, the close, the high, the low, and the equilibrium of the order block, right? Especially if you have an order block. These are the key levels that you're going to mark on these three candles. Now I'm not going to mark all of them because the chart will be a mess. But for here, I mark the high. This is the equilibrium here of the order block. This is the close of this candle, middle candle, and the low of the middle candle. It's on the same level as the order block. This is the high of the third candle, the low of the third candle. These will be your key levels, which you are going to use to sell on the fourth or fifth day. Also, when you go to 1 hour, I want you to mark the order block that was used to check out this day's high. Same as the downtrend. 1, 2, 3. The order block here, right, on the second day, which was used to take out this first day's low, you want to mark it also. But I cannot mark it here since this will be the daily candle. So let's go to the charts. Right, our first example is this one. 1, 2, 3. The third candle closes below. So right, you mark the low. This is the order block. You also mark these are the two order blocks that we have. You mark the low of this candle, the low of this candle, the close of this candle, the low of this candle. It's almost on the same level though. I don't really need to mark the highs because sometimes they won't go to the high, but sometimes you also need to mark the highs. Even here, right? This will be the key levels. Right, now once you're done, right, like I said, these key levels are the ones you're going to use to sell on the third or fourth day. Okay, sometimes even the fifth day, right? 1, 2, 3, the fourth or fifth day, or sometimes sixth day, depending on what the market wants to do. Now let's go to 1 hour. We need to mark the breaker block also. These are the key levels. The breaker that took out, so this is the 1, 2, 3. The breaker that took out this high here is what? Is this one here, which is also on the same level as this. So these are the key levels that we're going to use, okay, on the third or fourth day, which is this one and this one. So let's see which was the key, which one was used. If you can look on the third or fourth day, they used this one here, or this one. The first candle low, which is the order block, was used right here. And now this is where you do your confluence. Now you start putting order blocks. You look at your market structure, order blocks, breakers, mitigation block. Here we have this order block. We also have this mitigation block here. So this was a very good level. This was engineered liquidity, just above the order block. Then they came and then you sell here. Let's go to the next one. Here, 1, 2, 3. Once this is complete, you mark. Come on. Right. So you mark, like I said, even if you sometimes if you're an order block, but this was not the order block yet, so I don't really want to mark it. because it's not an order block yet. So 1, 2, 3, you mark the close, mark the high of this one, the close of this one, also this one, okay? Like I said, if I mark all of them, this is going to be a mess, but anyway, let me just mark all of them. Okay, also this one. Right, so 1, 2, 3. Then you go to 1 hour, you want the breaker block that took out the first day's low. Our breaker block, where is it? It's this one here. So that's the other key level. Right, so we have 1, 2, 3. Now, on the 4th day, I'm looking to sell on these key levels here. Like I said, combine these key levels with your order block, with your market structure, order blocks, breakers, mitigation blocks, fair value gaps. Now, here on these 2 days, let's see. The 3rd day, which one did we use this key level here? This one, the one here. That was the key that we used. Then also we used this one here, the first candle high. It was used here, as you can see, right here. What other conflicts did we have? This order block. When prices came to the order block, they came to the order block and also what? This key level. You could have bought here on the lower time frame. You know how to buy on the lower time frame. I don't need to go there anymore, right? And then again, even on the 4th day, there was also a buy. Where? On this level here, this one, right here. This is the level. And also, what did we have on the lower time frame? This order block and this mitigation block. Right, okay, let's go to the next one. We're going to this one here. 1, 2, 3, complete. Again, you mark this close here, the equilibrium of the order block. If you have an order block and it's valid, the high of this one, the high of this candle, you've marked everything. Then now you need to go to 1 hour and mark the breaker block that took out the first day's low. This is the first day's low, this one here, right? We use the order block that took it out. It was this one here, right here. This is the breaker block. This is also the key level that you're going to mark. So these are the key levels that we have. 1, 2, 3. Now, on the 3rd day, they used the breaker. The breaker was already used up, okay? But like I said, now we want to look for a swing setup on the 3rd or 4th day. 1, 2, 3. On the 4th day, we did not have a buy setup, but on the 5th, we have this one here. This was the key level. This one though. So you can calibrate it. Okay, so let me check which one was it exactly. The second candle was actually this one here. Oh, no. The second candle here was the equilibrium of the order block. So let's see if I marked it correct. So it's supposed to be just above, it's a little bit. All right. So now these are the key level that you're going to use to buy. You're going to use that key level to buy. I swing for a swing setup. Look here, right there, and this is your order block. Also, we have this order block here. This order block. If I go to the lower time frame, what else do I have? There's probably something else there. Okay, same order block here. There was a stop hunt BMS, and then there's also an LP here. This stop hunt here. This one, stop hunt BMS, then they came back. This was the buy setup. You would have bought here. Right here. Look at the reaction right there. That's the key level. Let's